We just wrapped up a great call with Matt Cavanaugh, who went from teacher to B2B salesperson to real estate investor and agent. And he has a very varied path to finding his success in real estate and business generally. A lot of great things, a lot of great tips for what to do, what maybe not to do, and really some advice generally on how to find a right path moving forward into the investment and real estate space. Patrick, what do you think about today's episode?
Today's episode was another fantastic episode. I know I say it about all of them, but truly, really great. We talk about, buying tax lien properties. We talk about buying mobile home communities. We talk about buying boarding homes where you're renting by the room out of state, all the different things. And more importantly, we talk about investing in yourself and throughout your journey as you are a real estate investor searching for financial freedom. So if that sounds like you, listen to the end. And here it is. How's it going, everybody? And welcome back to the Real FI podcast. I'm your host, Patrick McGrath, with my co-host, James Rippion. How's it going today, James?
You're making me dizzy, man. You got your camera like focusing in and out. It's like throwing me off a little bit. You're going to have to upgrade your equipment at some point. But regardless, we've got our friend Matt Cavanaugh here. He's going to be talking to us a little bit about his experience in real estate, what he's got going on with business. So without further ado, Matt, how's it going, man? Why don't you introduce yourself to our listeners?
Awesome. My name is Matt Cavanaugh. I live in California. I run a real estate agent team here in California. I also invest across the country. So I own properties in California, Oklahoma, Illinois, et cetera. And so I really, really enjoy both the agent side of the business and the investing side. Being someone who wanted to pursue freedom, I know you guys are all about pursuing freedom and getting rid of the grind. Real estate was the way that I did that.
So tell us a little bit about yourself, like before you got into real estate. Like what were you doing before you became an agent, started running a team and investing?
Yeah, going way back. So I went to college, got my degree in math, taught high school math for a few years, loved the students, didn't love the pay, left that for a B2B sales job, which was kind of the foundation of a lot of amazing things for me. So my income tripled, my skills, I built real sales skills. So I used the communication that I learned in teaching, built the sales aspect, and then from there started investing with the extra money that I had. It introduced me to real estate, and then the rest was history. So once I did one deal with my mother-in-law, I made about as much on that deal as I didn't make because I was just helping her. She made as much as I would have made an entire year of doing that job. So that's what cued me into leaving that job for real estate. So leverage the sales skills and just grew from there.
So you mentioned you're in California. Was that first deal locally in California, or did you, right out of the gate decide to invest out of state?
Yeah, so it was a tax default scenario. So these people were, in California, you get to be delinquent for 5 years before it to go to auction. So my mother-in-law was sending out mailers and some things to people that were, about 5 years delinquent, hoping to get them early enough to where they would have options. But usually they didn't respond until a day or two before the auction. And so this particular property that I was referring to at 9 o'clock the morning before the auction, we got a call and we had to go negotiate, get the entire deal done in about 6 hours. So we worked a few of those, and that's kind of what opened us up to the investing side.
That sounds really interesting. We haven't had anyone on the podcast talk about tax defaults before. So if you wouldn't mind kind of giving us a little rundown on how that all worked out for the listeners out there.
Yeah, and I know every state's different. So like some states you can pay and then you get like interest back, like high interest. There's a lot of different states do it differently. In California, my understanding from what we've done is that if you paid the property taxes and then they went to pay them, you're not getting any interest, you're not getting any of those benefits, right? So it has to be 5 consecutive years of them not paying anything. So there's a lot more risk here in paying people's property taxes, but in some states, people do, tax delinquent investing, like they're investing, getting a great return. And then sometimes they have an ability to get the property afterwards. For us, it was just a matter of it's county by county, but they would publish a list of here's the, properties that are going to auction if these taxes aren't paid. And then, we would begin reaching out and trying to, help provide some options to these people. But most of the time they ended up just needing to be bought out for the auction.
Understand. Yeah. Here in Maryland, specifically in Baltimore City, there's a lot of people that buy up water. It's property taxes, ground rent, and the water. People get behind on their water bills, they pay them up a couple grand, and then you charge 15, 20+% interest. So we've heard that before. So that was your first deal. Let's get into a little bit, like, how much did you buy it for? Did you renovate it? Did you rent it? Did you flip it? Like, let's talk about that real quick.
Yeah, so that particular property was a really interesting one because it got purchased, and then a few weeks later, someone got in after the property had been cleaned out and started a fire. So we're assuming it was someone on drugs or something like that. So fortunately, there was insurance on the property that took care of more or less the cost of what my mother-in-law had into it. And then the property went on the market and sold for 85 grand 2 days later. Even as in the condition of being burned. So it was pretty wild to watch. And it was like, wow, okay, we bought this property for pennies on the dollar, had some pretty crazy issues with it, but still made a lot of profit. And it's like, if all this could happen on a deal like this and we still made a lot of money, what happens when the deals go smoothly? So that's kind of what triggered in my mind, like, okay, it's time to get out of my W-2.
That's really interesting. And I think something that's kind of timely for our market for people to take an appreciation of is where there might be future opportunity with these tax delinquencies. Because I can't tell you how many times I've represented buyers or sellers and looking at a house that the tax assessed value is like half of what the trading price is, ending up being at the settlement table. So, you got a lot of people entering into 7% mortgage rate debt and making these like really large payments, only to like find out maybe in a year or two when the property gets reassessed that they're going to be paying even more on that in the future. So, looking into the future, if I had a crystal ball, maybe I might say tax delinquencies might become more of an issue and opportunity. So, just something for our listeners to kind of pay heed to and keep an eye on.
Yeah, 100%. And when we first started, the game was pretty wide open. And then within a year or two of working on these tax default properties, which it's not like there's some all the time, right? It's usually like once a year auction. And so it got very competitive. And so it really drove the profitability out of that thing. Plus the number of defaults were lower, like it's gotten really low, but I think you're right. I think coming in the next few years, delinquencies are going to increase quite a bit.
Makes sense. All right, now let's continue down this journey. So you do this first deal, you guys make a ton of money, and you're like, I got to get rid of the teaching job or the sales job, whichever one you were in at the time. Let's continue this journey.
Yeah. So this is where some limiting beliefs crept in for me. So I left the job and I was like, okay, I got to be an agent to really learn this thing, right? I didn't take credit internally for having done a very profitable flip. And so as a result, I really focused on getting listings and growing my real estate scenario. So the first 9 months, I did about 30 transactions, just doing a lot of hustling, right? Phone calls, open houses, et cetera, and continue to grow that year over year. It wasn't until a few years later, like 3 years later in 2018, that I was like, what am I doing here? I should be investing again. And so once I started investing, then that became the focus. Just because, as you guys probably know, investing can be such a greater opportunity than doing agent work.
Yeah, it's always incredible to me how many agents represent investors and people that are wealthy through real estate, but don't own real estate themselves. And there probably is some element of a limiting belief or imposter syndrome or whatever it might be. But that's a pretty common theme. I see that all the time. So in 2018, like, you're getting into the investor mindset more so now than you were before. Like, what kind of things are you looking at? What kind of deals are you looking for? And where did you go from there?
So I bought 2 deals locally. You can get pretty good equity in California if you buy right, just because prices are higher than in most states. So, you could buy deals $50,000 to a couple $100,000 below their market value or more, depending on what the deal is, what the circumstances are. So I ended up buying a couple properties. One was getting ready to go to auction for foreclosure. One was somebody that just needed cash, in 5 days. And so they were willing to take a lower price to accomplish that goal. And so as a result, I held on to those for a little bit and rented them out. So, and on top of the equity that I got as a result of the purchase, they increased in value a lot in those couple of years that I held them. So those deals formed a fairly substantial amount of equity. So I took those deals plus the down payments I used to buy them. And I ended up selling those properties and doing a 1031 exchange into some properties out of state to maximize cash flow. And so within 3 transactions, a total of 5 properties, I went from very little, no passive income, and a little bit of equity to a lot of equity and a substantial amount of cash flow.
So did you 1031 the two properties into one property, or did what did that look like? What did you end up buying that was out of state?
3 properties, single family, that were rented by the room. And so the rents collectively were absolutely substantial. So basically I 1031 for what I had in basically the sales prices of the 2 that I had was the price of the third one, like almost exactly. But the value of those 3 were substantially more than the price. And so as a result, picked up again, an additional huge equity chunk. But the bigger thing for me was the opportunity at some cash flow, because my main driver at that point was, hey, if I can get a livable amount of cash flow built up, then, I get to call the shots for my life forever. So that was the main driver.
Yeah, that's really amazing. The fact that, you were able to take two properties that were doing okay, that you had built up equity, and use them as your foundation to then really search hard for a deal that's going to give you what you wanted next, which was that cash flow. So we've had 1 or 2 people on the podcast talk about, renting by the room. Let's dive into that just a little bit. Like, how are you able to do that, investing out of state? I know sometimes property managers aren't going to manage those because they're a headache. Like, how did you work all that out?
So we're still working all that out, I guess you could say. We've owned them for a couple of years. So the person who helped me find the deals said they would manage them. There really weren't the personality to be a manager. So we inherited the properties that way. So that's the reason we went that route. We didn't fill them and start them. So there were a number of tenants that were probably not the best tenants. So we had to go through a series of evictions, and we've kind of a number of things, but we've got a property manager in place now that is very on it. So we're kind of moving them back to full stability. We also, there was some work done on the property that had not been permitted. City found out, and we've been on like a 9-year battle with them on one of the units. So that's created some difficulty. So we definitely had some pain. It hasn't been all joy, but it's I would say, like, if you're going to do something like this, you want to really know you've got quality management in place, because the projected profit you think you're going to make is not there without that.
So tell us a little bit about these leases, because you're renting out by the room. How are they structured? Is it a week to week, month to month?
Yep.
And then on top of that, on top of the lease structure, what kind of tenants are you getting into this complex?
Yeah. So they were originally structured week to week. We're starting to move towards month to month. And so one of the properties has less bedrooms than the other one. So we're actually converting that back to a standard rental. So our 5-bedroom properties do, of course, a lot better than like a 3-bedroom property. So we're if we were to continue to grow this model, we would just go after 5-bedroom properties. And then anything that's like, maybe 4 would kind of be like, it would be a leaner, but 3 or less, obviously it's not the right model. So we're taking one of those houses and converting it back to a standard rental. And then the other 2, we're just, we're filling. So as far as the leases, it's week to week, but we're moving them to month. If you have, like, for example, we'd have 13 to 15 tenants in these 3 properties. And so like 15 week to week, that's a lot of management. So 15 once a month is not so bad. So, so I think the week to week, the intent of the owner, my understanding of it was he did week to week so that more people would pay if it was week to week. But we just thought, why don't we just do better screening and get better tenants? And so that's kind of where we're at. We're replacing tenants with quality tenants, so we could do the once a month and they still are paying. And then I think, James, you had asked the question, like, who are the tenants? We just seem to attract, generally speaking, people that are a little bit older, that kind of want to live with people. They want that community, but they're maybe single or whatnot. We don't market to that specifically, but that just seems to be what comes through.
Makes a lot of sense. I think some people forget, like, by doing it by the week or even bi-weekly, you're going to get an extra month of rent out of that instead of doing the month to month. So that's one of the things that I think some people try to maximize their ROI, push that, getting that 13th month out of there, which I think is pretty interesting. So What
Mhm.
so what'd you do after this one? So you bought these three, you got
Yeah.
everything.
Yeah. So after those three, I went ahead and I bought a number of properties. So some flip properties and some single family in different areas. Got very adventurous to see like what areas do I want to work. Kind of the idea was I'll buy all over the place, find where I really love, like what I really love, like what asset class and where I really love. And so as a result, like we just bought a little while ago, we bought a 38 space mobile home park. So we're in the beginning of getting that full. And so we're just kind of dipping our hands in a number of different asset classes. I don't know that that's an advisable strategy, doing all these different asset classes, but I kind of wanted to I figure I'm going to be investing for like 50 years, 60 years, however long I get to live on this earth. So I was like, I'll take 5 or 10 years and learn what I love and then do that for a long time. So the mobile home park it's really enjoyable from the standpoint that there is just no real headaches. Obviously there's an element of activity that, to fill this thing up. But as far as like, we don't own the homes, the infrastructure is taken care of by the city. So it's like gross revenue, basically like almost no expenses, right? Property management, sometimes some weed cleaning, and then what we get coming in on net. So I could easily see us doing more mobile home parks in the future.
So just to fully understand like how this property works is you guys own the property, you own the pads, and what you're doing is you're leasing out the pads to people who can bring their own home. And that's kind of where your revenue is coming from.
Yeah. Yeah. And this is a really, really rural mobile home park. I know a lot of people don't like to buy rural, and I can totally understand that just because it becomes much more active in getting them full if they're not already full. And so, yeah, so there's a bit of marketing that we're doing as far as, to acquire the homes and acquire the people that will be buying and renting those homes.
So if it's super rental, I'm sorry, super rural, how do the utilities work? Do you have like public water and sewer, or is it all
Mhm.
septic and well?
Yeah, yeah, no. So it's definitely like it's on city septic and on city water. So that to me, I don't know that I'd say it's an absolute deal breaker, but I don't know what kind of returns I would need on a deal to want to take on the infrastructure of a mobile home park. So yeah, I know it's all on city stuff.
Gotcha.
Makes sense. So for the pads that are empty, are you putting units on there and then selling them to residents, or what's the plan with that if you do have any empty pads?
Yeah, we got plenty of empty pads. The cool thing is we got the property for so cheap that we were netting about $1,000 a month with it being like 25% full, something like that. Maybe a little bit, maybe 30% full. So the plan is that we're going to pair, so we'll do a marketing funnel to get people that want to live there. And then we have 2 dealer relationships. And so we'll just play matchmaker, and essentially that sense, they'll pick out what they want. And then that dealer will deliver it and put it in their name.
That's amazing. That's amazing. So I got to ask, how much did you pick up this 32 or 38 unit, rural mobile home community for?
For 170,000.
Wow, that's amazing. 170 grand, and it was cash flowing $1,000 at 25% full. Like,
Yeah.
that's freaking awesome. All right. So what are you've done some flips, you got a mobile home park, what are some of the other things that you're dipping your toes in?
So I think I'm less likely to go like all over the place, and starting to hone in on like, okay, I definitely like I like states that are less regulated, and I like I want to make sure my relationship with the team that I'm going to go into an area on is really, really deep. So also I think too, like I like to think about skill set. So like my skill set is really designed well for like acquiring deals at really good prices, much more than it is at managing things. So for me, it's like, I don't mind buying deals anywhere in the US, but if it's not like in a core area where I have a really, really strong team already built, then what I'll likely do is just make income on that, like flip it, and then take that income and invest it into other properties. I'm also becoming way more pro investing in syndications. So there's a lot of tremendous operators out there that you can still get a lot of the tax benefits and the things that you want from real estate by investing in syndications. And so as time goes on, more and more of my net worth will be invested in that direction as well.
Yeah, I love that idea. Mostly because today I decided I'm going to be investing in the syndication myself. And
Oh, sweet.
so I'm kind of curious, as to like how your thought process goes with selecting, maybe a sponsor or a specific class, or, however, whatever direction you want to take it. So like, how are you thinking about syndications and like where to put your money?
So first of all, like I like diversity, but for me, like diversity for me is like still I could be entirely in real estate. So I don't know if you guys saw the interview that Dave Ramsey did with Graham Stephan, and then Hormozy commented on it as well, where they talked about the diversity of your portfolio should be similar to the diversity of your knowledge set. And so for me, because almost everything I do is in the direction of real estate, like that's where I'll focus. But where the diversity comes in is multifamily, these types of asset classes. So, I'd love to do some multifamily. I feel like it's a safer bet than a lot of asset classes. The returns might not be as good as some of these more nuanced, like assisted living and that type of stuff. But I think probably the bulk will go in more like safer asset classes, and then probably like smaller amounts in these more blue ocean type asset classes.
That makes a lot of sense. And I tend to agree. I consider myself diversified because, I have like 35 units over 6 different properties. So I'm like, and they're in a couple different areas. So it's like, that's diversification for me, but, sprinkle in some single families for that appreciation down the road, sprinkle in, some commercial space, and I'm all tied into real estate, but I'm diversified in these different asset classes and these different, basically like class levels, A, B, C, that type of thing. So I love that strategy. So, is that kind of where what are your goals for, your investing strategies? Like, is it a income number per month? Is it a net worth number? Like, let's dive into that a little bit.
So yeah, it's a great question. And I think this is where you guys and I are so aligned. Like we have a podcast called the Freedom Chasers Podcast. Like we're super about getting freedom. So for me, it's like, I just want to be able to spend my time doing the things that I love and I'm passionate about with the people that I'm passionate about. So, for, like generally speaking, like if I were to look at my expenses, I generally spend between 10 and maybe 16,000 a month is like our personal expenses. And so, somewhere in there is good, but obviously like I'm also a person that loves to grow. So it's like, we don't want to stop, if we hit certain targets, but I will say, like, the higher our net worth gets and the higher our cash flow gets, the more like I want to experience it and experience that freedom and give back and these types of things. So I would say, like, I just don't ever see myself stop doing it. But definitely there are certain things within what I do that become less. And so, to me, like the whole thing is all about freedom. It's like, where is my energy being maximized? Where do I feel the most vitality? Where am I of the biggest service to people? And that's where I try and place the time.
So along with that, do you have any kind of like specific metrics that you're measuring to get to that, monthly income amount, or, some sort of measurable outcome that you're kind of striving for?
Yeah. It's gone up and down too as the market shifted and as things have shifted a little bit. But I would say, like, generally speaking, my goal is to get to a place where I've got my money in places that are like at least 15%, but hopefully about 25 or 30%, cash on cash return. And so some of that will be syndication. Some of that will be our own deals. So as far as like how to invest it, it'll be based on like, okay, if a deal presents itself and we can do it and we can make really good money on it, then we'll do it. If not, we'll probably just take that money and put it in syndications. But as far as like, how much do I want to be at tomorrow or next month? I don't really have too many goals like that. It's really more of optimizing my daily schedule and the enjoyment of that, and realizing like the path that I'm on, if I just stay on it, like I'll have more wealth than I'll know what to do with before I die. Because I'm in a field where all I'm thinking about all day is helping people grow their wealth and me as well. So I found that for me, like I used to have goals, like really big goals all the time. And I found that I think it often leads me into bad decisions just as often as it leads me into good ones. Because like, okay, let's say I set a goal if I want to make $1 million next year on active income and I want to invest 700,000 of that or 600,000 into investments, and I want that to produce at a certain level. Then all of a sudden I might make decisions on my investments based on that. And that might lead me to buy a property that's a little bit riskier, or, like, I don't know that I would have bought the rent by the room properties if I were to buy them again today, right? I might have taken that amount of capital and deployed it into a syndication or deployed it into a joint venture on a much bigger asset, where I had zero management. So I would say, like, sometimes the goals for me have created some problems.
Well, and I think that's what's awesome about what you've done is you've experimented with a whole bunch of different avenues of generating money, wealth, and income in real estate. And you've learned from each of those experiences what you like and what you don't like. And it sounds like, at the end of the day, you're going to keep building what you're building and you don't intend to stop. But the goal is the path and almost the process to get where you're going, which is generating time freedom to do everything that you described. So I think that's awesome.
Yeah.
If you were to, talk to your younger self, and you have all this experience behind you right now, like what would be your advice to that younger self of yours, who's looking to get into real estate and start investing?
You are immensely more talented than you think. You are, like, risk will seem a lot scarier than it should be. Like I'm still am a pretty big fan of being pretty financially conservative when it comes to like reserves. My belief now, and I would tell my younger self, this is the only way that you lose a game is if you run out of money. And even then, you just hit the reset button like in a video game and you get to start your new life. So I would say, like, I would have a much more risk accepting stance within the context of keeping solid reserves. And so, like, I mean, all the fears that I had about leaving my teaching job for sales and leaving my sales job for real estate, and then kind of stepping out into investing, like all those fears, like they felt so real, but like, my goodness, they went away fast once you did some deals. So I would say, like, I would have just broken the cycles faster as far as getting into the bigger stuff.
I think I love that advice. And I think everyone out there who's listening right now can probably take that and think about it to themselves. It's, most people start investing in the single families because it feels safer, and it takes forever for them to grow and get, into bigger things and diversify because of the fear, and I think that is ripe and perfect advice. Now, so we talked about kind of all of your different investments in real estate assets, but you're also an agent. Let's talk about is it a brokerage business that you have, and kind of what you have going on that side of things as well to tie this all together?
Yeah, so I have a small real estate team, and this is something that we've grown bigger, and then we've kind of contracted it back down. So at first, the goal was to follow a lot of the team models where you're doubling every year, and so we did that for a few years, and then realized profit was definitely not doubling along with the revenue doubling. But it seemed like we were doubling to 4 times the responsibility, the risk. So we got to a certain place in the growth of that where we felt like the pivots that we would need to make didn't make a lot of sense. And so that's when I started doing investing. So we've kind of scaled the real estate team back down, but it allows me to serve friends and family members and a number of people. So we're really running that as like a skeleton crew. But it provides some decent income, and it provides a foundation for what we do. So, but yeah, we've just kept it super, super small. So like we add team members from time to time if we feel like, man, they really understand what we're about, and it's a good fit, then we'll add them.
How big's the team?
Yeah, we have a team of four agents and a couple of virtuals and a transaction coordinator. So pretty small.
That's great. That's great. So you've got all this, and that's kind of what's funneling and funding all of your other assets and what you've got going on. So, let's dive into, I kind of have a feeling where you're going to go with this, but let's dive into, the motivation behind all this. Is it strictly to get back your time? Is that the number one motivator, or what else, internally is like really pushing you to kind of do all of this?
Well, I mean, there's a lot of elements that are really enjoyable. Like to me, negotiating a deal is very, very enjoyable. Like the strategy of the situations is very enjoyable. So like there's an enjoyment in doing what I'm doing. But yeah, absolutely. Buying time back and it's just buying freedom is what it is. So like I love doing what we're doing today. Like I love hosting podcasts as well, like learning and growing through people. I love the friendships that get built in particularly the podcast space around real estate. So like, just some of the opportunities, like being able to put money in deals and partner on deals or bring money from other people to deals. Like there's just so many things that like happen as a result of being in this space and being in the content creation side. So I would say like, probably the greatest freedom that I've experienced is the freedom to just spend most of my day thinking about strategy, negotiating, and just doing the things that I'm really, really passionate about.
I could not agree more. I think that is huge. That's, one of the main reasons that James and I started this podcast selfishly was to be able to have conversations with guys like you, with all of our other guests, and ask our own questions, build relationships. So when it's time for me to do a development deal, or when it's, when I'm looking at a bigger multifamily project that I've never dipped my toes in, or mobile home or something like that, you now have these resources and people that you can call on by creating a platform to talk to people. And like you said, you can't necessarily get in the room with people all of the time doing all these different things, but by having this outlet, it really helps you kind of up your game and get to that next level of conversation, that next level of thinking. And I think that's really, really great.
Yeah. And there's like so many things too. Like, so we've hosted about 400 episodes on our podcast. And so like you learn like strategies for sure, but you also kind of learn the BS things that people tell themselves over and over and over and over again. Like there's so much perspective that happens by doing a lot of podcast episodes in a similar like industry or space. Like you see what the current trends and thought lines are. And then every now and then you get a guest on that doesn't do those. And you're like, okay, awesome. So I would say like, there's a lot of things that I tell myself that I'm like, that just wasn't the best thing to tell myself. Like it just wasn't accurate, wasn't the best strategy, wasn't the best this. And so there's a lot of prevailing thoughts at any given time that are just, they shouldn't be the prevailing thoughts.
Yeah, I can't tell you how many times I think Patrick and I have talked after a podcast episode and had a come to Jesus moment, like with everything that we've done in the past and what we're doing now and what we should be pivoting to do. And it's great to have that relative context against like all these different people with different experiences. But with your background and what you're currently doing, investing and as an agent, I'm not going to let you get out of here without talking about the market. So, tell us a little bit about what you're seeing, where you're at, maybe elsewhere in the country where you're investing, and, just kind of describe, what you're experiencing with your boots on the ground.
So from the agent side, if I'm speaking to agents, like the brokerage that I met has about 700 agents, 600 or 700 agents. So it's a big brokerage. And I think, the broker had told my dad, who I got to put, so I brought my dad on the team about 7 years ago, something like that. And he told my dad that they're down like 70-ish% in transaction count as a brokerage, which is just nuts. I don't know exactly how down we are, but I would say that's not out of the realm of question. Maybe 50% or something like that we're down, just because we don't do a lot of active marketing to do deals. So that seems to be like somewhere between 30 and 70% seems to be kind of a common thing we're seeing is agents are doing a lot less deals. That being said, like I haven't seen that much of an impact on pricing. Right. Because like what I had a podcast guest that called it the great stalemate, which I feel like is a good description because basically it's like buyers aren't buying and sellers aren't selling. And so it's like you're not getting the benefit as an investor yet of the drop prices because there's too little inventory to let the prices fall. But one thing that seems to be potentially happening is as things stalemate, there are some people that get a little bit more like, I've got to get this done. And so like I was setting up some showings for a client in the last couple of days, and actively 2 agents went out of their way to tell me they're motivated. They'll really negotiate on price. That was not a thing 6 months ago. Like you would never hear that from anybody. And now like agents are getting desperate because they haven't made income in a long time. The sellers who need to sell, really need to sell are struggling. So I've just been shocked at how fast it's gotten to a place where people are like, basically like whatever offer you put in front of me, I'll get in front of the seller.
Yeah. It's been interesting from my perspective. I know Patrick might have different experiences, but I've been buying like small deals periodically for the past couple of years. And I've really been waiting for a lot of pain to hit this market on the seller side to really jump in and get the work. I've been occupying myself, buying, doing all these little things I've been doing, but it is the great stalemate. I think that's a great way to describe currently what's going on. Mostly probably a product of where real estate interest rates or mortgages were and then are now. How do you give up a 3% mortgage? I'm in the same situation. I'm trying to move, but probably the mortgage rate I'm paying today is keeping me in place a little bit longer than otherwise would be. Patrick, I mean,
Yeah.
what do you think, man? What are your thoughts on the market? Based on what Matt's been describing and saying.
I mean, my thought is 100% the same thing. Like it's an inventory problem that we have, and there's no move up market. So the first time home buyer, typically someone like James is going to move up as his family grows. So that's 2 transactions, and that gives someone an opportunity to move into a starter home. And the people are not going to double their mortgage payment for 1 extra bedroom or a little bigger house. So we have an inventory problem. And if the Fed drops rates next year and the banks get a little bit more comfortable and we get close to that 6% mark, it's only going to drive up prices. And I really don't see prices coming down that much in the midterm. I think we need to be in the 5s for people to consider to start moving again and get that train rolling. And I personally think we're going to kind of be in this stalemate for the next 2 or 3 years, if not longer. That's just my investor opinion. That's kind of the information that I'm getting out there. But only time will tell. James and I did one of our first podcasts at the beginning of last year when rates started going up, and we're like, they'll never get over 5.5%. Well, here we are at 7.5. So,
Right.
I'm an idiot. What do I know? I just know the stuff that I'm involved in. But no one's got a crystal ball to really tell us, what the hell's going to happen.
Well, Patrick, what we keep saying over and over is you don't need a crystal ball when you're dollar cost averaging in the real estate and investments generally. Like, you don't need to know what the future is going to do. You just need to be consistent, keep taking action, keep buying deals, and don't get shaken out by fear. I've sold some stuff a little prematurely when I shouldn't have in the past. Biggest investing mistake has ever been selling. So, take a lesson from that. Don't be too fearful when things get a little turbulent, but also don't wait too long to get into your first deal.
Yeah. Yeah. If you're playing the long game, you're usually in really good shape, right? It's just if you're playing the short game where you can get yourself into trouble.
Yeah. And that's kind of why I like the idea of syndications too, because I have no opportunity there might be like a discounted rate that I could get out, but that would be really painful. So my money is going to be tied up, and one of my weaknesses, candidly, is selling too early. So I think that's a strategy that I'm using to shift in my real estate acquisition path to accommodate something that might be a shortcoming of mine. So interesting self-reflection there.
Yeah, well, and it's interesting too, because as you go down the syndication route, it causes you, at least for me, it causes me to think about being a different person, right? So like if you're a syndication investor, then the idea is that you want to spend your time maximizing your day job, right? Not your W-2 day job, right? But like how you generate income. You maximize income in placing the syndication. If you're an active investor, then it's different, right? Because then you're managing all these projects. So for me, I've recognized, that syndications are probably much better route for me than most active investments. And so as a result, it's like, okay, well, the next thing you want to do then is like, how do I 3X or 10X my income so that I can, keep pouring in to see that growth? Because I think that's a hard thing, because I'm assuming you're similar, James. Like, one of the reasons we sell too early is because we're chasing squirrels, or we're doing this, that, or the other thing. And so as a result, it's like if you're a squirrel chaser, like one of the hardest things to do is buckle down and just let your investment sit and be in the same space. So it's like, but I think that's kind of what's really going to separate someone that's maybe a high 6-7 figure net worth from someone who's a mid 8 figure net worth, is just that consistency.
Couldn't agree more.
Yeah. And that kind of leads us perfectly into our next question, which is, what obstacles do you see yourself facing in the pursuit of this financial freedom journey? And, 2-3xing your income to continue to invest more money into these syndications?
So one interesting observation I made about myself, and probably the vast majority of podcast guests that I've interviewed, is this absolute need to be at financial freedom yesterday. But then the second that financial freedom is reached, it's like, well, we all know we're going to keep working. So why was there that push from the beginning when we know that we just love the work itself? Like most of us have a hard time going on vacation because you can't really shut it off, that type of stuff. So I would say the obstacle for me is it's really battling myself. Like I have a desire to conquer the things in me that don't serve me well. So for example, getting laser consistent has been an obstacle. And so that's something that I'm working on constantly. It's like, how like I've kind of shifted from like a results oriented mindset to where it's like I want to achieve this goal to like, how can I be the absolute best version of myself in all the areas of life, right? How can I, let's say I'm going to work a 50-hour week or 60-hour week, whatever that looks like how can I maximize that effort, right? Then how can I then shift so that in the evening when I go home to be with my 4 kids, I'm just as on point there as I am during the workday. So I think the biggest obstacles right now are me. And so that's really what I'm going to war with every day is myself.
I'll touch on that a little bit too. It wasn't until I had kids well, I've got 1 kid, another one on the way, that I really gained an appreciation for the process and the path being more valuable than the end result. Because, I've met a lot of people who are fighting for financial freedom, but they do it at the expense of living today. And I've seen a lot of people later in life who did that, accumulated a lot of wealth, but they have really shitty family situations, and not a person I would ever change places with. So, it's one of those things where you got to counterbalance life. You can't have it all, but you can choose to succeed in a few relative spheres. So I think that's important for people to really have an appreciation of.
I totally agree. I think that self-reflection is a big thing. We had a goal of, we have a goal of 30,000 a month. We're halfway there. And now that we're halfway there, I'm like, you know what? Maybe I need to start thinking about these longer term things, like development deals and some of these bigger things that are going to take a lot longer to do, but that are going to be more fulfilling, to help out the community, to do a project from start to finish, all that other stuff, because that's the person that I want to be. And it's like, well, we don't need to hit that right away. Like we don't need to get there right away. So I think that's awesome. I think this has been a great, compact, perfect conversation so far. So with that, let's jump into the next segment of the show that we call the Big Four. James, take it away, sir.
All right, this one's easy, Matt. I want you to tell our listeners something that you do or have done in your life that's like a financial independence cheat code or some sort of hack that really propels your finances forward.
I know this is probably going to be fairly commonly talked about on your show, but just to reiterate it, because I think it's so important. I think investing for equity in equity markets and investing for cash flow in cash flow markets. So there's a lot of people that only will invest in one market. So for those that are willing to go and invest in different areas of the country, you can pick up huge amounts of equity in deals like, say, places like California, New York, et cetera. You then can transfer that equity to cash flowing markets or into cash flowing style investments. So I would say leveraging the markets themselves to your advantage, and then leveraging the tax code, whether it's 1031 exchanges or cost segregations, those types of things. That's an absolute cheat code, because if you have to pay taxes on every dollar that you make, it just really elongates the game. And if you're trying to get all of your investments in one area, you're certainly not maximizing. And so for me, I would say the cheat code is kind of the combination of those things: getting lots of equity, transferring that out, right, tax deferred into better investments, and then capitalizing on the cash flow is the fastest way to get to financial freedom.
What an amazing cheat code. I think that's like the best 60 seconds we've heard on this podcast in a long time. So freaking fantastic. All right, number 2, we call this one resources. Are there any particular books, podcasts, or people that have really shaped your investing strategy, your business mindset, that maybe our listeners haven't come across yet?
Yeah, I mean, there's so many, my goodness. So, from listening to podcasts, obviously, like my journey started by listening to Bigger Pockets, reading books like Robert Kiyosaki's book, et cetera. But more recently, like I've been in a journey like to understand more about getting closer to truly passive. So we have I'll link a series of books, but the other thing that I spend a lot of time in is just self-development and kind of maximizing my own understanding of myself and personality. So I'm a big proponent of the Enneagram, just for the purpose of like understanding like what makes you tick, your motivations, and then leveraging those. So I would say like anything related to psychology, particularly books like The Road Back to You as an example is a good primer. But I would say anything that helps you understand yourself, your limiting beliefs, and then on the investing side, the hands-off investor is pretty good.
Love it. Love it. James, number 3.
All right, Matt, number 3, it's the future you, 5 years in the future. Where are you in your personal life and with your business?
I would imagine in 5 years I'll be an absolute machine, because every day I'm trying to move into areas that I'm better at than others, and trying to define my health in different ways and do things to maximize performance and presence. And so I'd say in 5 years, if anybody were to come spend a day with me, they would hopefully not for my sake, but just hopefully they would be in awe of what can be accomplished in a given day. Like given the fact that there's no wasted moments and every moment is spent in an area of skill.
Man, that's super inspiring right there. I love that answer on, projecting out there, like you're going to be the best version of yourself in those next 60 months, within those next 5 years, to be able to help other people. So that is freaking awesome. All right. So the last question is for all of our listeners out there that want to follow along on your journey, want to check out your podcast, want to reach out, say they were inspired by this episode. Where's the best place for them to reach out and follow along on your journey?
Yeah. So if they go to referrals.mattcavy.com. So there's a couple things that we do. One is that we help agents and investors kind of grow their business. So if they go to that site and they can book a call on there, I'll give them a free call where we can break down their business. Generally what we're doing, like the people that we can provide value to are agents that want to grow or investors that want to grow. We help them build that. So if they want to just connect with me that way, or they can find me at Matt Cavanaugh or Matt Cavy on the socials, and follow me there.
Excellent, excellent, excellent. Well, what an amazing, packed full podcast. We really appreciate it. To everyone out there, if you enjoy guests like this, if you enjoy content like this, if you love the podcast, please leave us a review. Google, Apple, Spotify. Are you subscribed to our YouTube channel yet? We're still trying to hit our 1,000 subscribers. So please go out and subscribe. Send James and I a DM. We love your messages. We love the inspiration that you guys are out there getting from the show, and we'd love to hear your feedback. And with that, we'll catch you guys next time. Peace.
See you guys.